I love being able to sort of pull back the curtain and talk to smart people about great companies like Birch Gold Group on Mike's Kitchen Chats here on MikeOnline.com. Phillip Patrick is a precious metals specialist, a spokesperson for Birch Gold Group, a company I tell you about daily on the Mike Gallagher Show. You'll notice from his accent, he wasn't exactly born in Covington, Kentucky. He was born in London, earned a degree in politics and international relations at the prestigious University of Reading, spent years as a wealth manager, and now, of course, a big part of the Birch Gold Group family. I had a listener, Philip, this week from Britain, a caller call me a presenter. I love the way you Brits call talk show hosts.
We've got some good words for sure, and presenters one of them.
You do. You got some great words. And one great word right now is gold. And man, oh man, you guys have got to just be so busy. There's big market moves have taken place over the last few days. Let's talk about the volatility. What's driving the volatility in your world right now, Philip?
You're right. We're starting to see the air come out now, I think, of the Fed-fueled bubble. The S&P slumped now for 3 weeks in a row, so we're starting to see it winding down. Look, the indicators have been pointing to a bubble really for a long time now. What we've been seeing, the Fed now raising interest rates, albeit marginally, 0.25%, and we're starting to see the market shudder and falter. Rates right now on treasuries are coming close to 3%. The market has historically always performed a lot better with rates below that level. So it looks like the carnage that we're starting to see is going to get worse. Now, I think if we fall into deep recession, we may see the Fed start to back down. But I think what's very telling is that a 0.25 point raise in interest rates has led to an 11% slide in the S&P. I think it's an example of how fragile this market was, but it's not new this year. The indicators have been there for a long time. Price to earning ratios, a key indicator of value, have been historically high for the last number of years. We've seen the yield curve invert on a number of occasions over the last few weeks. It's probably the best signal of recession to come. It's inverted prior to every major recession in the last 70 years with only one false flag. So, all of the alarm bells should be ringing right now. It's a long overdue correction that appears is on the horizon.
I want to talk big picture with you for just a moment, Philip. I want to talk to the lay person who's not real familiar with what it means to take a portion of your savings and diversify, to invest in gold and silver. So can you talk, this is like, the handbook for dummies or gold for dummies or broadcasting for dummies. Let's talk to a dummy like me and people who are not real. I know there's tons of people who are turning to Birch Gold Group now and investing in gold and silver. Explain why, with crazy inflation and with prices soaring, grocery store, gas pump, you name it, why does it make sense to have a portion of your portfolio in gold and silver?
Look, I think you summarized it quite well. It's really the climate that we're in, right? We have a stock market, as we mentioned a moment ago, that's faltering. As you stated absolutely correctly, we have inflation raging right now. It's at 8.5%, the highest it's been in 41 years. Now, the key for me is in climates like this, you have to look at safe haven assets, right? The traditional options struggling right now. Bonds have traditionally been a safe haven. The US bond market index is down 9% for the year so far. It's been the worst quarter for treasuries in the first quarter of this year in half a century. The stock market, typically a very good inflation hedge. We've discussed alarm bells there ringing. So the key is to look at an asset that is conducive for climates like this. So let's look at it quickly. Precious metals being safe haven assets. When stock markets decline, they tend to increase. When we look at the last crash in 2008, gold and silver doubled within 18 months of that. More importantly, when inflation rises, right? Everyone knows what that means. It's when things become more expensive over time. But the technical definition of inflation is the rising cost of commodities and services over time. Well, gold, silver, they are commodities. So by definition, as the cost of living increases, they tend to move up with it. So as tough as the climate is in front of us, it's actually very conducive for growth in safe havens. And we're seeing that already. Gold's up almost 5% for the year, silver's up 2%. So with everything else coming down, with inflation rising, these are assets one can count on in tough times, and their performance is showing that.
Visiting with Phillip Patrick, who's with Birch Gold Group, precious metals specialist. He knows this world as well as anybody I've ever met. Let's talk about recession. This is a word, the R word, that many, many people fear. You mentioned an imminent recession. Why is it imminent in your view, and what do you think it'll look like?
Look, we'll see how imminent it is, but because a lot of it depends on the Fed, right? If they stick to their guns and they continue to raise rates, they're suggesting another 0.5%. If they do that, that could be the catalyst to crash the housing market and the stock market, both which have been going up for almost 13 years consistently. So a lot's going to depend on the Fed, but let's be very clear. This correction in the markets is long overdue, right? We are now, 13 years since the last major market correction. It's the longest bull run that's ever been seen in history. You could go back to the 1800s and show that this has never happened. When you look at how big it could be, really the numbers suggest it could be a fairly sizable correction. There's something that we look at when you look at stocks. It's called a price to earning ratio. Today, that price to earning ratio, cyclically adjusted, is about 33.5. For a little bit of context, the only time that number has ever gone above 27 in history, we had the Great Depression, the dot-com burst, 2008, and now today. So essentially, the stock market has never seen this multiple and not been followed by a close to 50% drop. So if history is anything to go by, it could be a significant correction in the markets. The big concern is if you have that with inflation, that becomes an issue, right? If your accounts are coming down or staying static and everything else is becoming more expensive, that's a climate that people call stagflation, and it's a very dangerous climate. The last time we had it, 1970s to 80s in the US, and for anyone that remembers it, they were tough times to get through. This is very reminiscent of that.
This is why you need Birch Gold in your corner. It's real simple. You could just text the keyword Mike to 989898. We'll send you an information kit about how Phillip Patrick and the team at Birch Gold can help you. Mike for Gold. You go to mikeforgold.com, mikeforgold.com, or again, just text the keyword Mike to 989898. Thousands of satisfied customers. I'm one of them, and after talking to Phillip Patrick, I think you can see why. Phillip, thanks so much for joining us on Mike's Kitchen Chats on mikeonline.com.